Welcome back. You're watching Commodity Champions, and shares of Indian textile companies rallied over 8% in trade after the US imposed a steep 35% tariff on garment imports from Bangladesh. The move is expected to boost Indian textile exports, particularly in the US markets, where Vietnam leads with a 19% share, followed by Bangladesh with 9% and India at 6%. While the tariff is a notch lower than the 37% initially proposed in April, it is still more than triple the earlier base rate of 10%. This could significantly shift sourcing decisions in India's favor. To unpack what this could really mean for the sector, we are now joined by Prabhu Damodaran. He's head of Indian Textpreneurs Federation. Mr. Damodaran, hi, thank you so much for joining in. First of all, your initial reaction. Everybody seems to be applauding this. At this point in time, the numbers look very, very good. Is India ready and has the capacity and the capex to make good use of this?
Good evening. Yes, it's good news emerging. All stars are aligning for Indian textile sector. Actually, if we want to see some kind of a data, yes, like the global trade is also in slow lane, and the same kind of things are happening in apparel also. We don't have any kind of a protein story like in the food sector to grow our kind of a trade in double digits. Only thing, how each country is grabbing the market share from others is the main key area to watch. In that sense, for example, for the past 3 years, if we take the CAGR of US apparel imports, US imported around $79 billion of apparel during 2024. If we take 2021 as the base year, the CAGR growth is only in the range of -1%. So the trade is not growing. The challenge is how we are going to capture the market from other countries. Now, with the Trump tariff announced as of now, we are at 10%, Bangladesh at 35, and Vietnam at 20. India definitely have advantage. Let us see what kind of a performance for India in the past 3 years. In 3 years, almost we and Vietnam and Bangladesh have similar tariff lines. So in such situation, India gained considerably in the US market. For example, for the past 3 years, CAGR of Indian apparel export to US stands at 3.8%. At the same time, Vietnam grown only at the rate of 1.4% CAGR and Bangladesh at 1% CAGR. This shows that even before these kind of tariff changes are happening, and American buyers are preferring Indian goods, Indian sourcing. So this trend will accelerate in the days to come because of the changes happening. At the same time, it's all moving parts. We can't say anything as static. For example, now August 1st deadline itself is a kind of a negotiation tactics with other countries so that Trump administration may even revise the tariffs based on the further whatever the trade deals happening with our competing countries before August 1st. So as of now, yes, we are at 10% and Bangladesh at 35 and Vietnam at 20 and Cambodia at 36, definitely leading to an advantage for India. And already we are witnessing good amount of sourcing, and this trend will accelerate. Very, very importantly, India have some unique advantage. That is where global buyers are very, very upbeat on India. For example, we don't have any import dependency on raw material or intermediate goods to make textile apparels. That is a very big advantage. Now buyers demand supply chain visibility, source of goods wherever the origin is coming. So a lot of compliance also gaining momentum now. At this stage, India and China, only two countries have entire value chain in place.
Oh, absolutely.
So now China is already degrown by 6% in the US market for the past 2-3 years. Now India is the only reliable alternate to China. So we are very confident. Already our monthly export run rate from $350 million to US improved to $480 million now. And we may expect another $150 million of additional US exports in the days to come. Okay. Only thing, we need to invest boldly in capacities. We need to create scale and competitiveness to handle this kind of a massive inflow of orders. With the combination of US For example, if we imaginary situation,
I
if
just want to get to
trade
some numbers as well, Mr. Damodharan. You explained to us on where India stands, and yes, we are in a position of advantage here, and our numbers seem to be increasing. But as you said, there is a need for capacity increase, competitiveness, and of course, investments as well. Just to get some numbers on table, then, what is it that India contributes to the world right now in sense of exports? How much of that is a contribution to US? And with all this as a background, how do you see those numbers improving, let's say, in a year from here?
Okay, we can simply break down as monthly export numbers of apparel exports. China still, after all this noise around China plus one opportunity, China exports around $13 billion a month, apparel exports alone. Apart from the $13 billion, if you take textile and fabric exports, they are doing another $12 billion. They may be losing market share at US, at the same time they're gaining, or they are diverting the goods to other Asian countries. And Vietnam also. So monthly run rate of China at $1.13 billion, Vietnam at $3.5 billion, Bangladesh at $3.2 to $3.4 billion. We are at $1.5 billion monthly run rate of apparel exports.
Yeah.
We improved from the average of 1.2 to 1.3. From this 1.5, we need to reach at least $2 billion monthly run rate, so that our market share in US will improve from the current 6% to 8% range. And from wherever you see, either Europe or UK or any developed markets, our market share is only in the range of 5 to 6%.
Okay.
So there is a plenty of opportunity to grab. As I said, we need to confidently invest in the capacities. For example, now the low-hanging fruits. For example, spinning industry is a so matured sector in the entire value chain in the industry. We have good capacities, competitiveness. At the same time, due to various dynamisms of the industry, margin profile is changing, margins are shrinking. And so it's right time for the spinning companies to think of integration model, so that they can venture easily into apparel, and asset turnover ratios are high in apparel, and EBITDA margin, ROC, everything is better. So India have 100 and more than 1,000 spinning companies. At least 100 companies have good size and scale. They can easily venture into apparel, because somebody need to invest and create capacities. It is not until fabric stage we have a huge capacity. Apparel making is an area we need to boldly invest. Now Mitra Parks also coming.
Sure.
So 7 states.
So would you say it's a very divided market right now when you look at garments on one side and ginning and spinning, and of course these are different markets, and as you said, garments is something that India really needs to work on. So what is the kind of capex are we talking, and what is the number of companies that you think are ready to get head on into this?
Actually, we can categorize it small, medium, and large. 3 categories are there. Already integrated players who build size are making a decent margin, and they are very confident. And we are seeing a lot of listed companies also announcing a steady capex. Everyone is a little concerned about these kind of uncertainties, because uncertainty is the enemy of any business. Now, if tariff clarity is coming up, naturally the integrated large companies must announce capex. They are the leaders, and they need to demonstrate that in practical terms, so that medium and small companies also will follow the same trend. In our own Tamil Nadu, already 35 to 40% of apparel exports contribution coming from Tamil Nadu. We are seeing a lot of SMEs also very confident about UK FTA, and a lot of UK buyers started engaging well on the ground. And we see that 70 to 80 companies are building up capacities in wherever the manpower is available. The workers availability is a very, very important thing. That is where the Mitra Park and the construction of staying facilities, those kind of infrastructure, plug and play infrastructure, these things are very, very important to scale up in garments.
Sure.
So we are seeing 6 to 7 states are very active. Okay. Number one, and it's right time to launch PLI also. Say apparel PLI
that
for
exactly,
cotton apparel.
Mr. Damodharan, is my next question really, because while as you said, competitiveness and capex needs to increase and capacity needs an increasing as well, but do you see that you would require, the industry that is, would need a government push as well to make use of this opportunity?
Yes, definitely, because the uncertainties always create some kind of hesitancy among the investors. So if we create this kind of a plug and play facility and offer some kind of a PLI, the momentum or motivation will be much more. And it's right time, because if we improve a $1 billion additional exports from the current level, it creates 1.5 lakh new jobs. Only furniture and furniture manufacturing and apparel creates so much of jobs for the whatever the investments we are going to make. So it's a win-win for everyone. Win-win for the government, win for the policymakers by way of job creation, for the export earnings. So PLI is the ideal answer, and PLI should be designed in a way that even the medium companies also can be the part of the story, because PLI means mega scale. And in apparel, we can't think in those lines. We need to design a scheme that even the medium-sized companies can move towards the next stage of growth by building 500 seats kind of a capacity.
So as you mentioned, Mr. Damodaran, that it's a big opportunity right now for the Indian textile industry with the current tariffs that we've seen across countries there. So, but what India needs to do is, of course, a bit of a government push from one side, capacity, capex, integration. There's a lot that India needs to do. Today, of course, has been a knee-jerk reaction, but to take it ahead and make it a reality, there are some steps that perhaps need to be fulfilled right now. Thank you so much. Yeah.
One more point I want to add, a lot of expectation about tomorrow's announcement on US trade deal. Number one, we hope that will happen. Number two, maybe we may get a zero duty on imported cotton from US also.
Oh, well, absolutely. Those are a couple of very positive things that you mentioned, and yes, the street seems to be anticipating it as well. But thank you so much for joining in today. And with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.